going to wait a couple minutes here, and then we'll get started. Okay, let's get going. Welcome, everyone. We've got a few people on here. This is Michael. Those of you who don't know me, I am Director of Education with Options Players. Might seem a little strange, but I'm located in Malaysia, in Penang, Malaysia. And as many of you do know me, I trade the U.S. markets. Opens at 10:30 p.m. and it closes at 5 a.m. in the winter, and in the summer it's an hour different because we don't have daylight savings time. So every day, what I do is I go through after hours, because that's my waking time. I go through a market scan of various things using some various tools, web-based tools, to take a look and see if there are any, let's say, longer-term opportunities. And longer term for me is anywhere from 2 to, say, 15 days, sometimes as many as 30 days. So I'm looking for opportunities for options trades by doing these scans. So most of what I do is R&D. And then if I do find anything, I will, generally what I'll do is I'll put orders in before the market opens, and just before I go to bed at 10:30, 11, even sometimes midnight, I'll take a look and see if those orders are filled. And then I manage them when I wake up for my pee at 4:30 in the morning for the last half hour of the market open. So I'm going to go through some of those that I do, but first I'm going to actually show you how I import various lists into my options analysis software. But before I do that, I would like to just get a disclaimer out. I want to make sure that everyone understands that everything that I present today, while this is real-time stuff, these are case studies. Okay, I'm not a registered investment advisor. I'm not a broker dealer, and I'm not telling you which securities you should buy or sell for yourself. You need to check with your advisor or tax advisor to see if this is okay with them. So there is a high degree of risk in trading. So just make sure that you understand that what we're presenting here are case studies. If you do decide to take action, that's on your own. So I'm just kind of going through the process that I go through to let you know what's going on. So what I'm going to do tonight, or I'm going to try to keep this to 45 minutes or less. I'm going to do what's called a sector review. I like to do this every couple of weeks or to a month to see what's happening out there, and if there's any one sector that might be doing better than another. So what I'm going to do then is I'm going to import the chosen sectors into my options analysis software. I usually have this pre-done, but there are members of the current basic training course that we're running in Options Players on here. So I'm going to show you how to do that since they're using Tom's Options Tools. And then what I'm going to do with those lists is I'm going to do a market scan, and I'm going to do something different from what I did last week. What I'm going to do is I'm going to do both a bearish and a bullish directional movement indicator crossover, and I'm going to cross-reference that with a Bollinger Band scan that looks at the lowest short bandwidth divided by the longest bandwidth. It's basically called a squeeze, and these are stocks that are trading in a narrow channel that don't normally trade in a normal channel and have a potential of breakout. So I'm going to cross-reference that bearish and bullish crossover with this Bollinger Band scan to see what we might be able to come up with as potential candidates for an options trade case study. And then what I'll do is I'll put together a sample case study and trade plan for a long of the day, if there is any, and also short of the day, if there is any. I don't really know yet. I haven't really done this. I just kind of did a little pre-work just to get ready for this. So let's just go into what I believe is a very, very nice tool for you, and it's called Sector Spider. It's www.sectorspider.com, and you can play around with this site. It's a really nice tool for taking a look at what's kind of like the 10,000 meter view, or 40,000 foot view of what's going on, what's ticking. And you can go into full sector tracker, and what I like to do is I like to take a look at the sector charting to try to identify for the year to date at this point, so we're about 2 months into the year to date, which sector, meaning like the XLY, XLP, XLE, the technologies, XLK, which top 2 or 3 sectors are outperforming relative to the other ones. We've had a nice row up in SPY, the S&P index, and all these are components of that. So which among them has the best performance? And needless to say, what happened in the market today, this is really, again, the 10,000 meter view. So what you can do this by kind of looking at this way. Okay, consumer staples not been doing too well compared to XLY. Energy is pretty low. XLF, that's probably going to be pretty high. Yep. Healthcare, it's not doing so great, but it's done better. It's better than 0%. Industrial, materials, real estate, utilities, and technology. Okay, so you got to kind of track this, but the top 3 actually are technology, financials, and consumer discretionary. So you just take those off and you can see, you can see what I'm talking about. These top 3 are really the most performing. Right there. Okay, so they've actually done really well, and it's no surprise that they've done well. And then you can kind of take a look at this and where does it stand for the last 1 month for these 3. They're still up there. Obviously, the technology is much better than the other 2. The technology is positive for the last month, where the financials and consumer discretionary are a little bit negative. You can take a look at 5 days. Obviously, things have gone down a little bit, and then, of course, today only. And out of all 3 of these, the best performing actually was, so I think it's XL. No, it was the financials. The financials have been doing the best today. So what I want to do then is I want to actually take a look and see if I can sort some of these things in a way that is meaningful, that provides me with potentially some opportunities for either a momentum play if it's going to continue to go up, or if there's maybe some opportunity for going down, or maybe even bouncing. So what I'm going to do is I'm going to actually import, I'm going to show you how to import some of these into XYZ options analysis tool. Now, everyone knows that it's part of options players that I use heavily the Tom's Options tools. So I'm going to show you that, but I'm sure you can do this with any other one. In my opinion, Tom's is the best, but you're going to have to find that out for yourself. I do highly recommend using an options analysis software because it really kind of gives you that good view and good visibility of what actually you're doing and allows you to plan. So I've already done XLY and XLF into it, and I'm going to show you how to do the technology. But what we're going to do is we're going to do a scan on, actually, we're going to do it on the financials, and if we have time, I'm going to do it on the XLY. Technology bothers me a little bit right now. I think we got a little bit up and down, and there's not really a directional trade that I'm looking at right now in that. So let me just go into the XLK just to show you what I do and how I import that. So I click on that, and I'm able to get into the holdings, and you can create let me just get rid of this. You can create an XLS file with these holdings. And all I have to do is I just have to highlight and copy. Okay, so that's done. Take a look at the site; it's really good. Okay, so now what I'm going to do is I'm going to go into my Tom's Options Tools, and I want to establish a list. And I go into List, Edit List, and what I want is I want to overwrite one of these list numbers. So you can see I've already done XLY, I've done XLF, and I'm going to click on list 4 because it's going to be empty. And all I have to do is I have to paste all of those symbols in there and then edit the list name to XLK, and I save it. Okay, so now I have a list. Okay, I've got the same thing I've done with XLY. You can see that I've got all the names of XLY, and I also have all the names of XLF, which are going to be fewer right there. Okay, so these are all lists for me. So now what I'm going to do is I want to start looking at these, and what I said is within Sector Spider, the best performing in a negative day today like this, but it's also among the top 3 performings, is I want to take a look at sorting those somehow in a way that's meaningful to try to develop some candidates, okay? And we'll see if we can identify 1 or 2 or maybe 3 or 4 candidates within XLF for either a long or a short or both. So what I'm going to do is I'm going to go into stocks, and the first thing I want to do is I want to go into stock analysis, and I want to identify which ones of these have made new highs or lows in the last 52 weeks. Now, obviously, this is very intuitive. I think we all know what's going to be on there, but let's make some let's confirm it. So what I do is I click on XLF or whichever list I want. I can do XLY, I can do XLK. Let me use XLF. And what I'm going to do is I'm going to search stocks with highest close for the weeks chosen. Sorry. Insert that again. And let's take a look at what's on here. Okay. And there's going to be a whole bunch here. Okay. So what I'm going to do is I'm going to take everything that's over 90%. So it's made 90% or higher of a high recently. And that's how many trades? It's 25. So I'm going to take the top 25 and I'm going to overwrite what's called my stock list, which is going to be my working list for sorting. And I'm going to replace. After this, I'm going to take a look at the lows. Is there anything making a 52-week low on the same? And there's probably going to be fewer in the high percentage. So actually, it's very few above 90%. You only have actually one. So I'm just going to only add one. But we're going to remember what that is, AIG. So I'm going to add that, not replace. I'm going to add it to that list. Okay, so now I've got a working list of 26 stocks that have either made highs or lows, 90%, and 90% of its high or low or greater in the last several days. So now I'm going to take that. What I'm going to do is I'm going to search that, and I'm going to do something. I'm going to use the ADX function, but I'm going to use it a little bit different way than I used last week. And I'm going to search for two things. I'm going to search, first of all, I'm going to search my stock list, that shortened 26 stocks. I'm going to search it using a bullish positive DI days crossing above the negative DI. That's a directional indicator. The ADX itself is the average of the DI minus and positive DA. So what I'll do is I'll search that. And I'm going to write down a couple of the top candidates if there are any. Okay, so what we see here is out of the 26, there are only 8 that have recently had a positive DI crossover. So what I'll do is I'll write down what some of these are, and there's no surprise in what they are. I mean, we've got E-Trade, ETFC, we've got Discover Financial, and I'm going to put Bank of America on there as well because it's more heavily traded. I really like stocks that have a lot of volume, and BAC is one of them. Okay, and you can take a look at these other ones, but I'm just going to take these 3. Okay, and then what I'm going to do is let me just take a look at the short side of things, and let's see if there's anything bearish within that. Now, even though that some of these stocks have made recent highs, we could have a bearish crossover in some of them because of the market action in the last couple of days, especially today. So I'm going to search the list for the bearish side of things. Okay. And I think AIG is probably going to be on there. Oh, okay, it's the only one on there. So the only low candidate, bearish candidate, and this is not necessarily bearish, but the only bearish candidate is AIG. So I'm writing AIG down, and then of course we have the other 3. I think we'll add MS in there as well. MS is on the top one. And then on the bullish side we have ETFC, DFS, BAC, and MS. So now what I'm going to do is I want to cross-reference this with another. Okay, we have potential breakouts possible if you have what's called a Bollinger Band potential breakout. And what that is it's looking for the short Bollinger Bandwidth divided by the long Bollinger Bandwidth. And what these are is these potentially have breakouts. So I want to see if any of those top candidates might be on the list. So let me just take a look real quick on that one, and it's all within my stock list. So let's just see what comes up on this. Okay, well, among the top 2 was on our list. It was BAC, so I'm circling BAC. That's looking like it could be a nice potential opportunity. And after this, I'm going to have to go look at the charts. Now, on the short side, we had AIG, but it's on here, but it's kind of down here. It's down on the list, but I'm still going to keep it on. We're still going to take a look at AIG because it still is kind of right now our prime bearish candidate inside of the XLF. Okay, so now what I'm going to do is, now I've done that, now I need to take a look at the charts. So I've just spent all my time just kind of whittling down that list rather than go chart after chart after chart to look for various patterns that pop out. I've got 2 prime candidates, AIG and BAC. So let's start with AIG. Okay, well, this is interesting. Just get rid of this. This is interesting for me because we have actually, we've got we've got maybe some potential resistance there, but maybe it might even break. It might break that resistance. And if it did break that resistance, what are the chances are that it's going to go down? Well, you know, it looks like it's been resistance and support at the same time. So there's one of two opportunities here. It's either going to bounce or it's going to break. Obviously, if it breaks, you could start panic selling and you could go way down. Okay, so from a short perspective, you have a contingent opportunity here to go short or buy puts if you happen to break below this particular resistance, which is right about. You could even measure it. You can say that what's the low here? 58.92. The low here was 57.90. Is that right? The low is 57.90. So we're right around 57.85. So if you actually had a break below that, maybe it would be a good short opportunity. But at the same time, if you saw it bounce, it could be a long opportunity. I also like to take a look when I'm looking at this 10,000 meter view. I like to go out into the weekly and see if there's anything that's interesting from a weekly perspective. And there is something interesting there as well from a longer term perspective. If you take a look at that, it doesn't have to be perfect. We definitely have a descending trend line that first acted as resistance, but then once it broke from a weekly perspective, acted as support. Now, what's interesting here is I see also potentially another pattern, and it's looking like that there's actually a parallel channel there from a weekly perspective. And we almost have converging channels, or we got that support resistance down on the lower end, and we've got the channel down here. So if we did see a bounce, there could be actually a long opportunity. So what's interesting about all this is that sometimes when we're looking for short candidates, we actually find long candidates as well. And I don't know how to take this right now, but I think right now I would look at a potential contingent trade if and only if AIG broke that 57.85. On the flip side, if we got a confirming bounce, this would definitely be potentially a long type of entry. And you could measure how quickly it goes up when it bounces on here and kind of look at that slope and make some kind of prognosis, say, well, you know, maybe by this time I can get a rise to 60.38 type of thing. Okay, so we'll take a look at that here in a second. The other opportunity we saw was a long, which is BAC, and let's just take a look at that. Okay, so this is also this is a setup that I love. Despite the weakness in the market today, we are definitely still in a what I would call a secular bull market. We do get bouncing around, and maybe we're going to come back down a little bit before going up, but BAC is interesting for a couple of reasons. Okay, well, we've kind of butted up against a little bit of resistance. We've come up and everything, and we actually have, just like AIG, we have almost the flip side of the bearish the bearish opportunity we found with AIG. Potentially, contingent-wise, if we traded above a certain level, we could have a breakout. But on the flip side, if we bounce and we have a confirming bounce down, we have actually a bearish situation. And it looks like it falsely broke out today and came back down. So this is almost a confirming bounce. But if we started trading around in here, I would consider actually taking a trade down. Some kind of bearish prognosis. Now, those of the guys that are in the options course with us right now, we're going to be looking at credit spreads. And for me, this is potentially a really nice opportunity for a bear put credit spread. I'm sorry, bear call credit spread. So there's actually, for both of these cases, we have contingent longs if we break a certain level. And we have in the interim, we have potentially opposite trades, bearish on BAC and bullish on AIG, using some kind of trade. So we actually have come up with here with 4 types of trades. So that's what these scans do. They identify these opportunities to see where it's going to go. And I love doing this when we're in a sector, because what it does, it gives me offsetting trades. It gives me offsetting case studies that if I'm in one, the other one is going the opposite direction, and hopefully things are going to come up and I'm going to make some kind of profit on both, and they come together somehow. So going into a trade plan, what I'm going to look at is I'm going to start looking at potential entries. Okay, and because we're people here, I don't really know your level of options trading experience. I'll only go with a sample trade plan on a straight call or put. I won't do any kind of spreads or anything. But the trade plan, just to give you an example of a case study for BAC that definitely is not an entry yet, would be a contingent order of a call if BAC happened to trade above this candle right here. This is a false breakout. I don't consider that wick on that one. I would consider the wick on this one with a high of 32.67. So let's just say if we traded above 32.70, I would think about going into a call. Okay, so calls contingent on BAC greater than 32.70. And then what we would do is we'd build a trade plan based on that. Okay, so the date would be starting tomorrow, which is the February 28th, 2017. Time, we don't know. Underlying BAC, strategy, long call. We don't know yet on this one. If I were to go, when I go into momentum plays like this, I usually go fairly short term. I usually like to have a minimum of 7 days. So I'm going to say expiry equal to or greater than 7 DTE. And I usually like to go at the money. That's my personal preference. I know some people like to look at in the money with a 70 delta. I prefer 50 delta options. Position size on a trade like this is usually, I don't go more than, I usually don't go more than 4% of my account, of my trading account, my discretionary trading account. This is not related to my total account. 99% of my total account is long-term strategies. I don't trade discretionary trades on this. So I would go 4% of my discretionary account. Entry trigger, BAC equal to or greater than, what did we say? 32.70. Entry rationale, breakout of resistance. Technical stops. Well, if it breaks out and it trades below 32.70, I would get out. It's another false breakout. So the technical stop would be one daily close below 32.70. Technical targets. I'm not going to put a technical target on here. What I would do is I would put a profit target. And usually what I like to do on these types of plays is I like to sell 60% of position, 60 or 70% of position at 100% ROI. But I'm also going to have a stop. Stop loss. And I'm going to call that a mental stop. When I'm going for 100%, I'm perfectly comfortable personally of going for a higher loss. So in a case like this, usually what I'm going to do is I'm going to have a mental stop at a 25% loss. So that gives me a 4-to-1. Okay. As far as time stop goes, this is really a short-term trade. This is going to be evaluation after close every day. Okay, and if I see that it would be a really good profit, and 50, 60%, and it wasn't really, if the charts were kind of telling me that maybe this is going to slow up, I would probably get out. Okay, so that's my trade plan, and this is BAC. I do this every day. Okay, we had another one. We had AIG. AIG, I'm going to go a different direction. I'm actually going to call this I'm going to call this a bullish case study. But I want to see a confirming candle, a confirming green candle, one day in a row. So hopefully not too big. If it's too big of a candle, I would wait for it to retrace a little bit. So we're going to go, let's see, February 28th. 7, we don't know, underlying AIG, strategy, long call, option. On this one, I would go out a little bit longer. I would actually go out anywhere from 25 to 35 days to expiry. Position size, I would be going for, again, 4% of my discretionary account. Entry trigger. I need to see one green close. And if on February 28th, we're getting towards the last 10 minutes of the market and that green close is evident, I would consider doing it right in the last 10 minutes. Okay, but I need to see this really solidly green. I don't want a doji. I don't want anything. I want a little bit of a green close. Entry rationale, potential bounce on resistance. Technical stop. I would actually use a technical stop that if it trades intraday at less than or equal to 57.85. But I'm also going to have a fairly tight stop on something like this that maybe it wouldn't even get there. But the technical target on a 30-day option, my technical target actually is going to be right there. It's going to be the top of that. So my technical target would be right around 60.28. Let's just say 60. So technical target on this would be 60. Let's see. There it is. $60. Profit target, I'm going to keep the same thing. I'm going to be looking at selling 60 to 75% of position at 100% ROI. I don't need that. Okay, and I would have a stop, a mental stop. Okay, well, that's a technical stop. My mental stop would be here on this one as well, would be actually a little bit tighter. I'd be looking at a 10% loss. It's a little bit more risky. But if it went, it'd be a good one. So if I take a look at what this particular option would look like, I can go into my options analysis software and I can take a look at what this would look like. AIG, and I said I want to do about 30 days to expiry. Now I'd be looking at an at-the-money call if this happened to happen. And if I take a look at what that would be really, it would be about a 58.5 call. Assuming that I have a $10,000 account, what that means it would be 11 of those at 36 cents in rough numbers. If it goes up and we got a green candle, maybe it'd be 40 cents a piece, maybe it'd be a little bit more. I don't know. I would have to see. Okay. Again, this is a case study. It's only to demonstrate the process that I go through when I'm looking at opportunities and potential trades. Okay, so we are, oh, that's 3 days. I'm sorry, I'm on the wrong one. I wanted to get the 30-day. So March 29th. Okay. At the money would be 59, and it is 92 cents. So I would be going for 4 of those. If I had a $10,000 account, 4% of my account is $400. I'd be looking at 4 of those. And what I'm doing is I'm risking, in my mind, in my mental stop, I'm risking 10%, which is $40. But I'm also hoping for a gain of $400 or more. So that's what it looks like. Okay, and if it goes up, obviously I'm going to make that profit. Volatility is nice and low, so if volatility goes up, we're lucky. It usually doesn't happen when stocks go up. And if I wanted to really want to have fun, I can actually kind of tighten this up a little bit. And 52, let's see, 55 to 65. And you can see it a little bit better. So both of the trade plans that I put together are contingent trade plans. These go up onto my wall in my contingent section. I got a bulletin board divided into 3. I've got contingent. I usually have a good 8 or 9 sitting on that contingent. I've got firm orders in one, and I've got trades in play on the other one. It pins up, and I keep it organized. So I put that trade plan up on the wall, and I make sure that I look at it. I usually don't like to have more than 4 or 5 trades in play at once. That's actually gone up from about a year ago when I would really only have 1 or 2. But I've been having a few more lately just because of some of the courses I've been teaching within options players. So this is what the risk graph looks like. If AIG did go up, it really wouldn't have to go up very far to double. In fact, if it went up by 3.5% within 10 days to 60.27, so again, my target was $60, right? So if it actually does go up to $60, that's what I said my target was, that trade would double if it happened before 10 days. Here we go. So all we got to do is we got to get up to 60 within 10 days. Trade's right there on the 28th, and we'd have to get up there by the 9th. And we got up there by the 9th, we'd be in good shape. So if we were somewhere between here and obviously higher. Okay, so that's what I am looking at. Okay. Any questions via chat on the process that I go through and these two particular case studies? I'm not going to do the others because I've got to get on with my my normal day. So there's two case studies, and both actually are long. Both could be short as well, or one or the other. So you'd have to take a look at that and decide what you would want to do. But we could actually put together those case studies on the opposite direction as well, because I think both of these cases are valid either direction, both being contingent. Okay, so just a last quip. We did invite this, we did extend invitations to non-options players members. So if anyone on here is not part of options players, we're a community. We're a mutually supportive community, and there's a lot of things that we do that together we're all traders. And Steve, founder, also goes through a lot of things. This is actually a short-term watch list that he put up a couple of days ago, and I don't have the results on this, but I believe a day ago all of these were very, very solidly up, and they very, very well could be up as well today. I'd have to check, but you can check them. These are all just recommendations that he made and things that he was doing, so there's that. And then the other thing is we just so you know, that we just completed the last session of the earnings release strategies course. And we had roughly 30 or 35 plays that we reviewed real time during the course, the 8-week course, and with the various strategies. And I would say probably about 85–90% of them were successful with very, very nice ROIs, some totaling well over 100%, and very, very few losses. The first review kind of came up, Gabrielle, and so that's there. And you can take a look at this on optionsplayers.co if you want to take a look at what that course is. But we're going to be running that again starting April 9th. So if you're interested in that, we take a limited number of people because we can really only handle so many people playing the same plays that we do. So if you're interested, you can email me or actually Steve. But I have a feeling this particular course is going to fill up fairly quickly. So it's just a quick announcement on that. Yeah, optionsplayers.co if you're interested. So I know there's quite a few people on this particular webinar that were part of that course. So you know, much appreciated the reviews. It was a blast to teach, and the students in there, man, I'll tell you what, they really embrace this stuff, and it's really good to see students coming out of a class knowing exactly what to do, and they can actually go off and do things on their own. That's exactly what an instructor wants to see. Okay, so, and that's all I've got for today. If there's any questions, you can email me, you can email Steve, or if you got any very quick questions, you can send them through on chat right now. For the next couple of minutes, I can stay on here for exactly 6 minutes, and then I need to go. Time is ticking.
Michael, it's Sandy here.
Hi, Sandy.
Hi, I use FinViz for my sector sorting. Did you used to use that, or?
I've never used it. I suppose I could. I've gotten used to Sector Spider, and it works really well for me. So FinViz, I think, is out there. You could do that too. It's
Yeah.
really, I mean, all you need to do is you need to have something that allows you to give you that 10,000 meter view.
Yeah. And you said that Tom's course, that was what, 70 bucks a month or
Yeah,
something?
it's $79 a month. You know, full disclosure, I'm an affiliate there, and they pay me peanuts. I really use it. I'm an affiliate because I like using it for teaching. But yeah, it's 79 bucks. I tell you what, it's well worth it. I wouldn't make the profits I make without it. So.
Okay, thanks.
Yeah. So someone wanted to see let's see. Someone wanted to see the AIG. In most cases, when I'm doing a sector scan, all I'm trying to do is I'm trying to shorten my list of scans to go into the sectors that are going to be trending. The biggest problem with doing these scans today, and actually over the last 3 weeks, is we're gyrating. These scans would have resulted in completely different setups and stocks and momentum plays if we'd done this, you know, maybe a month or two ago, because we were strongly trending up. And I did do some scans like this. I think it was back in December or November, and it showed up. And it showed some really nice momentum plays that really got some strong results on calls. So it's really identifying the best of the best is what it's doing. So that you're going to get different results every time. And you get surprising results. Like today, the surprising result is that the two that we found, AIG and BAC, are both bearish and bullish, but both are contingent. Completely contingent. So the AIG, that's contingent on a green close on Wednesday, right? Yeah, Wednesday. Anything else? Oh, you want BAC. Okay, let's get BAC then. There's BAC.
Just to let you know too, Michael, you're in the wrong year.
Oops. Well, I do live in Malaysia.
Little behind the time, eh?
Hey, you know what? I'm not perfect. But I am in, by the way, I'm in Apple puts. So a little too much hopium that Apple's going to go up. Apple's got a really strong short setup right now. Now you could do equally with BAC. You could equally do what I actually would tend to do right now at this point is I would tend to actually go for I would go for what's called a bear call. Well, Hunter, if you know me well, you know that my expiry on puts is expiring this Friday. If I could be in puts that were expiring tomorrow, I would be in those. But you can't on Apple. So I am in SPX puts expiring tomorrow. But they are deep in the money. I bought them when they were out of the money, but they're deep in the money now. So. Okay, well, if there's no more questions, you got 1 minute left. You just joined out. Okay, welcome to Options Players. This is really cool. Take a look at our course that we run. It's called Green Goose. If you ask anyone around what Green Goose is, and you'll hear what it is that we do, or at least what I do, which is very often opposite. Green Goose is sometimes opposite of what Steve's text play does, but it still has a very high track, just as much of a track record as Steve's plays. So. Yeah, Knack was able to afford real food after taking the GG course. Okay, instead of just noodles. Okay, well, guys, I'm going to jump off. So appreciate your attendance, and hopefully this is useful. And again, if you got any questions, just email me. If anyone's interested in Tom's, email me that as well. I'll send you the link to get in, or enjoy OP, because it's really a great community of very, very supportive traders, and we do our best to keep you sustainable through a very, very focused training, but also training of how to plan your trades and trade your plans. Okay. Have a great evening and a great trading day tomorrow and the rest of the week.